Russia today has moved from an authoritarian regime to a totalitarian one.
I am rather disappointed with the several producing countries who did not take the necessary measures.
We will not be part of subsidizing Putin's war.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Biden administration bans all Russian fuel imports. The UK only matches the move in part, while the EU says it won't participate. No Big Macs, Coke, or Ventilate in Russia. More multinational corporations stop operations in response to the war in Ukraine. And Jeff Gundlach warns that U.S. CPI may hit 10%. The billionaire money manager says the Fed has done a terrible job in taming inflation. Now, let's check in on the markets. And I have to say, for many, it's pretty counterintuitive that despite the fact that we're seeing sanctions hardening effectively an oil embargo from the U.S. onto Russian oil, European stocks are gaining some 2.6%. Banks that were really slammed yesterday and the day before now gaining some 4.5%. The ruble, 134.0435. It's almost like a penny currency at the moment. But again, if psychologically you think about why we're seeing these gains, two schools of thoughts. Now, the majority of people we've been speaking to think that this is because there's dip buying, because we're trying to price in worst case scenario, and because the markets were so slammed since the beginning of the week, now's a good time or a good opportunity to scoop up some bargains. The other is that there's a belief in the West that this will de-escalate. Now, I don't know if there's any truth in that. A lot of traders trying to be geopolitical analysts, that has not always worked in the past, but we did have signs yesterday of Ukraine saying they would no longer be interested in NATO, possibly to save, of course, some of the civilian lives. So maybe some of this de-escalation is also filtering through the hope of some traders. The FTSE gaining quite significantly, and we're seeing similar gains for the FTSE MIB, and of course what we're seeing in the DAX, getting some 4%, one of the biggest gainers. Again, because of their exposure and proximity to Russia, they were the ones that suffered the most in terms of indices. So the U.S. banning imports of Russian fossil fuel, including crude, while trying to throttle Moscow's main source of income. Joe Biden says he will try to minimize a price hike at the pump. The U.S. president has told reporters that the move will deal a powerful blow to Vladimir Putin.
This is a move that has strong bipartisan support in the Congress and, I believe, in the country. Americans have rallied to support their Ukrainian people and made it clear we will not be part of subsidizing Putin's war.
Now, the UK government says it will match, in part, the move by the Biden administration. Britain will also be halting Russian oil imports while still accepting natural gas and coal. Other European nations will not participate. Well, we're joined by our Europe correspondent, Maria Tadeo, in Paris, where European leaders will meet to discuss the crisis. So, Maria, first of all, what does this mean for the U.S.? It's easier because they're further away and, of course, less dependent on Russian oil.
Well, Francine, they're further away. It's easier for them because, of course, the impact that they have in the actual transactional relationship is much smaller than the European Union would have. And I'm often reminded that for every dollar the United States is going to lose on these sanctions, the European Union, and in particular countries like Germany, could stand to lose 10. So, of course, they're much more exposed on the economic front. Now, when it comes to this embargo, full embargo announced yesterday by the United States, I was told by an official it is interesting that it happens right before European leaders meet tomorrow in Paris. Of course, this will be a subject of conversation. What do we do with the energy crisis? How do we speed it up? Yesterday, we had hints from the head of the European Commission, von der Leyen, saying we need to find new suppliers. We need to find alternative ways to get energy into our continent. We have to speed up renewable, and we have to become much more energy efficient in terms of the storage that we do. But again, the big issue here, of course, is that Germany has said we're not going for the nuclear way. That is not something that we're doing, essentially vetoed that decision yesterday. We say we want to move in with LNG. We want to do it at lightning speed, but of course that is going to take time. And for the time being, we simply just cannot unswitch from one day to another when it comes to Russia.
Yeah, again, it's a timeline problem. The EU says it has plans to cut Russian gas dependency. I think also the Greek Prime Minister has a very clear 6-point plan on how he'll do it. We'll speak to him in about an hour and a half from now. What's actually doable?
Well, Francine, what the Europeans say is that they want to cut down this gas dependency by 80% in the next 2 years, which already on paper is a huge target, and it seems very ambitious. Now, the problem, of course, as you know very well, Francine, is that right now, this date, there isn't really a unified European energy market. The exposure really changes by country. The energy mix is really different by every member state. So again, the problem is, are they talking about a European level, or is this just about individual transitions that need to be made? The other thing that Ursula von der Leyen hinted at yesterday is an investigation into Gazprom. She says that Russia is not acting like a reliable partner, and it's making threats to the European Union, perhaps also hinting that they want to cut down the relationship with Gazprom, which has been very, very profitable for Russia earlier than expected.
Thank you so much. Our European correspondent, Maria Tadeo, of course, who'll be following the proceedings in Versailles. Now, European Open co-anchor Tom McKenzie, my co-anchor in Poland near the Ukrainian border to report on the latest on the ground. Daybreak anchor Danny Berger is here with me to discuss a corporate exodus. So, Tom, let's start off with you. Bring us up to date with the latest situation at the Poland-Ukraine border.
Yeah, Francine, well, just a couple of 100 meters that way is Ukraine and the border. The crossing is right here, and you continue to see refugees coming over that border in trickles. The number that we've had from the United Nations is 1.2 million just to Poland alone. And again, that's just in 12 days. You're looking then at what is the largest refugee crisis here in Europe since the Second World War. Here on the ground, it's pretty brutal, the conditions. There's a bit of a tented city that's been built up here. There's a place and there are spaces for people as they cross over the border to warm up, get some hot drinks, some food, and pick up some supplies, clothing, and some medical stuff as well. But really, it's pretty threadbare despite all the efforts of the volunteers that we've seen on the ground here, the Polish, but also volunteers from Germany, France, even the UK. And I met a couple of guys from New Jersey just a couple of minutes ago, flying over from the US to help. The United Nations tell us that they expect these numbers to continue to increase. They're particularly concerned about what's happening on the Ukrainian side of the border, where people are having to wait sometimes days before they can cross. And the vast majority of these refugees, of course, 90% according to the UN, are women and children. In fact, we met a woman with a 2-month-old baby who's just been getting into a van, into a small minibus to go over to Krakow, the town here, the city in Poland, before she takes the next step. But these are people who have essentially lost everything, and they don't know, of course, when they're going to be going back to Ukraine. And many of them, of course, split up from the men in their family who have been forced to stay at home and in many cases fight.
Yeah, because of martial law. I mean, some of the stories are just absolutely heartbreaking, and it's really mobilized many people around the world, possibly leading to some of the sanctions also coming from Western leaders. What sort of financial assistance are the refugees getting?
Well, just to that point, the coordination, the cooperation that we've seen on the national level is being reflected to some extent on the ground here. This is just one of the border crossings. Of course, there are multiple border crossings between Ukraine and Poland. And just seeing that international mix, again, from the US, the UK, France, Germany, all coming down here, volunteers to help and assist. In terms of the financial assistance, Poland earlier this week pushed through some spending of about 1.7 billion US dollars. Part of that is going to go to Polish families who are taking in Ukrainian families. Part of it is going to be helping Ukrainian children get into the schooling system here in Poland. And they are also going to allow Ukrainians to work here legally in Poland for 18 months. But the Polish government says they will need additional funding from the European Union. Again, 1.2 million, the total number of refugees into Europe from Ukraine, more than 2 million. And the UN coordinator on the ground here that I spoke to last night said that number could easily get to 4 million within the next couple of weeks.
Tom, thank you so much. Of course, Tom, with some important reporting on the refugee crisis on the ground. If you look at the corporate response, Danny, I mean, this has, we have hundreds of companies that have said they either are suspending operations in Russia or no longer want to deal with Russia.
Right.
Which ones are the latest?
Well, we're starting to see more of these consumer names, these very well iconic U.S. names that are more entrenched in Russia. And this is part of the change here. I think a lot of them are seeing some of the scenes that Tom is describing. They're getting a lot of criticism on social media. So we're seeing McDonald's, Coca-Cola, Starbucks, ones with hundreds of branches branches in Russia. Now, to some degree, if one of these firms pulls out, it makes it easier for others. An example is Coke supplies McDonald's. So if McDonald's pulls out, it's easier for Coca-Cola to pull out. But, you know, just even McDonald's in itself, it's really iconic. Decades ago, you had Thomas Friedman coming up with the Golden Arches theory of conflict prevention, that any two countries that have franchises aren't going to go to war with each other because there's an economic interest. But now we're starting to see that separation of that economic interest.
And of course, we're still trying to weigh through, or the banks are trying to weigh through their exposure. UniCredit just the latest. And we don't know. I mean, they have a big exposure, but we don't know what they would do with it.
Exactly. It's much more complicated for these banks to disentangle their operations in Russia and really their exposure to Russia, because they face a lot of second-order effects. UniCredit is laying out their worst-case scenario. They did last night, saying 200 basis points they'd suffer in their capital buffers. But they do say, look, this is a worst-case scenario. This is if all of our assets in Russia get frozen. They say that that's not their base case. But I think the overall message from all of these banks and all these companies is the uncertainty. So, yes, the worst case might not be their base case, but we see again and again the worst case does tend to play out.
All right. Thank you so much, of course, joining us with the very latest on the ground. Tom McKenzie and our Danny Berger looking at the latest of the corporate exodus. Smart Conversations continue on Bloomberg Surveillance Early Edition. Up next, we discuss the latest moves, market moves, with Nanette Heschler-Feiderb of Credit Suisse International Wealth Management. If you have any questions for her, send them on IB plus TV Go. This is Bloomberg.
I can tell you, as at this morning, there is no physical shortage of oil. But there is a very strong perception in the market because of the volume that is at stake.
Well, that was the OPEC Secretary General, Mohammed Barkindo, saying that there is enough physical oil to go around in terms of the reserves. Having said that, the Russia-Ukraine war, already among one of the biggest oil shocks in history. According to Goldman Sachs estimates, the ongoing conflict in eastern Ukraine only ranks behind the Iranian Revolution in 1978 and the Arab oil embargo of 1973. Well, joining us now is Nanette Heschler-Feiderb, Chief Investment Officer of International Wealth Management and Global Head of Economic Research at Credit Suisse. Nanette, thank you for joining us. We're seeing a reversal, certainly today in the markets. And what we're trying to understand, if the DAX is gaining some 4%, is this because there's a slight softening of rhetoric in terms of NATO adherence from Mr. Zelensky of Ukraine and some of the things that we heard from the Russian side, or is this just classic dip buying?
It is very difficult at this moment to separate, but what is clear is that the market is under the influence of a lot of market psychology. In other words, when there is even the slightest glimpse of hope that we may be seeing a path towards the diffusion of this very grave situation, the market is reacting positively. And of course, because the European equities and generally the European economy was in the front lines in terms of the effects, the scale of negative effects for both the economy and companies, then it is also very clear that it is most sharply reacting to the upside when the news flow is taking a slightly more positive tone.
Nanette, what's most vulnerable? So again, we're seeing on the Russian side saying they will stop the export of certain raw materials. We don't exactly know the extent of that. What does it mean for how you want to be invested right now?
Well, I do think that it is very difficult to trade fluid situations like that. It has also been seen in the past with different sorts of conflicts. So I think that what makes most sense for investors is to stick to the general strategy which they have adopted, which I think has to take into account a further increase of interest rates, has to take account of the fact that probably equities do remain still the better equipped than fixed income. But in terms of mitigating investments for this short-term volatility that will accompany us still for a while, undeniably the energy sector in equities is one of the areas that provides shelter. In the best case, growth is picking up and energy is supported by that. In the worst case, it is prices that are continuing to increase and the energy sector continues to be supported as well.
Nanette, is there any doubt in your mind that we're looking at a stagflation environment? And I have quite a lot of analysts coming on and saying it's impossible to predict the commodity situation in 3 months, but longer term, it will be difficult.
I think we have indeed changed completely the inflationary regime that we are looking at from a financial market perspective. One important thing to observe is how inflation expectations are reacting. And it is a marked increase in inflation expectations that we have seen since the beginning of this armed conflict, of this war. 10-year break-even inflation rates in the US, for example, are back at 2.9%. This was the highest that we have seen so far in the recent history. And it is changing how people are thinking about inflation more longer term.
Yeah, and I have to say we have a great historical graphic looking at, bringing it back to 1973 with the Arab oil embargo, the Iranian Revolution 78. But of course, the world economy is so much more interlinked and so much bigger now. Brent crude trading at levels not seen in a decade, wheat hitting a record high, European natural gas record upon record. How do you hedge this volatility, Nanette?
Well, as I said, the energy sector is the one that is immediately benefiting from this circumstances. This is part of the hedge. I think that also when looking at equities, and particularly when taking a European perspective, dividend stocks are going to make a comeback for investors as a way of investing, more defensive way of investing. I also think that generally speaking, the whole security topic is one that is becoming a top of mind. And so safety and security stocks are part of short-term mitigation measures in portfolios, but also outright commodities. In alternative investments, commodities are looking now towards a very different cycle than still a few weeks ago, especially when you're considering the long-term implications of this conflict, which is towards a more multipolar world where just relations, commerce internationally is going to be having more friction.
Does it mean, Nanette, also that you need to change some of your forecast on currencies? And actually, I don't know whether it means that also be much more difficult to predict what the ECB will do, but what happens to euro dollar, and how does that mean you'll look at some of the equities, for example?
I mean, currencies generally are going to have a short-term outlook and a long-term one. In the short term, anything that is changing the cyclical outlook. So, for example, for Europe, we have already started to downgrade our growth forecasts and instead upgrade our inflation forecasts. So it is very natural to see the euro lose versus other currencies. Let's take the dollar as an example, where the economic impacts are less than in Europe. But I think what has to be borne in mind is how the world is changing more generally in the future and how currencies are going to be used. There, the odds are really out for how the dollar itself is going to continue, and the euro as well.
And so, Nanette, I mean, that means what you think that there's a chance that the US, of course, becomes less of a reserve currency also because of the sanctions, and that will move further east?
I think that a number of central banks are going to review their reserve policies, and it may also just simply change how, in terms of settlement currencies and financial payment currencies, how the flows are going to be redirected. And that is very difficult to assess as of now, what the long-lasting effects of these are. But if we are going to assume changes in trade, then we should also be assuming changes in terms of reserves.
All right, Nanette, thank you so much, as always, for joining us. Nanette Hechler-Feiderb, Chief Investment Officer of International Wealth Management and Global Head of Economic Research at Credit Suisse. Now, coming up, Mikhail Khodorkovsky says Russia has moved from an authoritarian regime to a totalitarian one. The exiled Russian businessman says the West should go after all oligarchs. We'll bring you that interview shortly. This is Bloomberg. Let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Good morning, Francine. The US says Russian forces have intensified their bombardment of Ukraine's capital, Kyiv. Meanwhile, NATO defense ministers are looking to bolster Ukraine's defenses as the Kremlin's assault takes a heavy toll on its civilian population. In a historic virtual speech to the UK's House of Commons, the first time a foreign leader has addressed MPs in the main chamber, President Volodymyr Zelensky repeated his call for the West to establish a no-fly zone.
Well, we'll have plenty more, of course, on all of those stories. Coming up, we look at Russian sentiment in the war in Ukraine and the latest on euro area banking exposure to the conflict. That's coming up shortly, and this is Bloomberg. The Biden administration bans all Russian fuel imports. The UK only matches the move in part, while the EU says it will not participate. The corporate exodus continues. McDonald's, Coke and PayPal are the latest companies that halt operations in response to the war in Ukraine. And Jeff Gundlach warns that US CPI may hit 10%. The billionaire money manager says the Fed has done a terrible job in taming inflation. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the market's actually gaining quite significantly in today's trading session. It does come from a low base because of the slamming that we saw over the last couple of days, but you can see banks at the moment gaining some 5%. We have to put it into context, and we also have to look at some of the distressed assets. This is the most important thing that we're looking in a Markets Live blog, is a lot of traders are saying that the assets are most vulnerable to distress since 2008. What's happening specifically in the markets today is they're trying to figure out geopolitically whether the situation is becoming better, although we're not seeing it from the shelling on the ground. And then the fact that there could be dip buyers wagering the global economic impact of escalating sanctions on Russia, and the fact that maybe, just maybe, it was already reflected in market prices. So the U.S. banning imports of Russian fossil fuels, including crude, while trying to throttle Moscow's main source of income. President Biden says he will try to minimize rising prices at the pump. Now, the U.S. president also told reporters that the move will deal a powerful blow to Vladimir Putin.
This is a move that has strong bipartisan support in the Congress and, I believe, in the country. Americans have rallied to support their Ukrainian people and made it clear we will not be part of subsidizing Putin's war.
Now, the UK government, meanwhile, says it will match in part the move by the Biden administration. Britain will be halting Russian oil imports while still accepting natural gas and coal. Other European nations will not participate. Well, with us to cover the Russian take on the conflict and sanctions, I'm very pleased to welcome Bloomberg's international government editor, Rosalind Matheson. Ros, first of all, thank you. I know you're under extreme stress of trying to figure out the situation on the ground. What is currently being reported in Russia on the war in Ukraine?
Well, it's a little bit hard to tell because, of course, inside Russia, the messaging is being very carefully controlled. Independent media has been curtailed, some shut down, and, of course, social media networks internationally are being shut down for Russia. So how much information is able to circulate is unclear. Certainly, you would imagine that the official narrative of the Russian government and defense ministry on the war is being disseminated far and wide, and that is the message that, as far as the Russian government's concerned, the war is going according to plan, completely according to plan so far. So that would be what's being propagated, at least within Russia. But of course, any country you can still get information, even the most closed off regimes, that is possible. So you imagine that some of the outside reporting of the conflict is filtering in there through some sort of social networks and other communication. And that's also just showing up on the ground. You can see that there are protests that are occurring across Russian cities against the war. Many Russian people have close ties with family in Ukraine. They were born there, they have family there, cultural links, and those communications will be going on regardless of what the Russia government is pushing through its media.
So, Roz, is public sentiment on the special operation Ukraine and Putin as sanctions are hitting the Russian economy turning, or is this really a fiction of the West?
It's also very hard to say. I mean, obviously, there are signs that things are showing up on the ground. There are signs of food shortages at supermarkets, of other goods, Russian people having difficulty accessing money, using their credit cards, being able to move about, and so on. So certainly some strains on ordinary people inside Russia. It all depends how much that shows up in terms of them blaming the Russian government. Of course, the Russian economy has been set up for many years to weather sanctions, possibly not as extensive as we're seeing now, and a number of companies that are pulling out. But people are used to hardship there. They're used to finding ways to work around, and already they're looking at alternative ways to be able to use money, to be able to use payment services that circumvent the sanctions that are already on Russia. So how much this goes on really depends how much it filters through to sentiment against the war, perhaps against the Russian leadership. It's just a bit early to say.
What is the likelihood, that this leads to a change in leadership in Russia? What is the likelihood that actually things de-escalate and the two sides come more to an agreement?
Well, that certainly is the big question. So far, as we're seeing, there's no let-up in the fighting on the ground and the shelling by Russian forces, including of the capital, Kyiv. There have been several rounds of talks at a lower level that haven't really led to tangible progress. It'll be interesting to see the Russian foreign minister and the Ukrainian foreign minister crossing paths tomorrow in Turkey. That's the most high-level interaction we will have seen since the start of the war. Is there a conversation that happens there? But right now, the Russian president is pretty adamant about his demands for what he wants from Ukraine, and the Ukrainian government equally is saying, well, they're not going to give in to those. So where the common ground is on that is still unclear. Certainly the diplomatic push is to try and find some sort of solution, to find something that can at least stem the worst of the fighting. But we're not seeing that so far show up, at least publicly.
Thank you so much, Roz, Bloomberg's international government editor there, Rosalind Matheson. Now, let's also talk about some of the corporate's exposure. UniCredit says it could, in an extreme scenario, suffer a hit of about 200 basis points to its capital buffers if the Russian banking assets are wiped out. Now, the Milan-based bank does not consider that to be a base case, but it still plans to pay a dividend on its 2020 earnings. Well, joining us now is our Bloomberg finance editor, Tom Metcalf, to really try and understand exactly the exposure of certain banks and what this means. Now, Italy, because of a lot of links in the past, Tom, does have quite a bit of exposure. It's Intesa, it's UniCredit. What do we know about that exposure, and what's the worst case scenario?
Yeah, so in the case of UniCredit, there's about 15 billion euros in total. They've got something like 4,000 employees in Russia, about 70 branches, so it is pretty big within the country. So what they're saying is, look, worst case scenario, if we lose all that, we're going to have that hit of about 200 basis points. And as you say, it's Italy, it's Austria. Those are the big banks that seem to be exposed to Russia.
So what does it mean for capital buffers? Like, do we have any idea? I mean, does this going to be just them writing off some of their exposure? Or can they, if they were to sell off some of the exposure, who would buy it?
Well, exactly. That's a fascinating question, and the sort of parallels with BP and their big stake in Rosneft, right? Like, they're saying they're going to sell it, but to who? So, they're saying this is not our base case. We don't expect it to come to this. But I think what investors are doing are sort of assuming it might well be. But that 200 basis point drop is sort of relatively absorbable within their kind of these big, beefy capital buffers they have.
Tom, how much are some of these assets actually distressed? And I don't know whether we need to go back to 2008 and look at some of the hedge funds and the linkage with banks. It seems, for me, improbable that we're 12 days into the conflict, that it's such a big economy, and we there's not some kind of big exposure apart from nickel. Let's put that to one side, where something could really go wrong.
Yeah, no, look, I think distress is the right word. I mean, these are unprecedented scenarios, right? And if you're talking about buyers, who are the most likely to kind of take on something like that risk? It is probably the distressed buyers, the sort of Apollos of the world, who might be more comfortable with that thing. But, I mean, the situation is so fluid, it's impossible to know. But yeah, it's everyone's kind of feeling their way through this at the moment.
And so banks are still, how long does it take? And again, this is an impossible question. It's an unfair question, so I'm sorry about that. But it is Wednesday, and we're trying to figure out the crisis. I mean, a bank, who do they call? Do they just literally need to go through their books trying to understand the second, third round effects?
Yeah, exactly. I mean, that's probably for the widest spread of banks, that's going to be the big thing. But say for a UniCredit, if you're talking about, hey, how long would it take to get these things off our books? That is, as with all banking transactions, that would take a while.
Tom, thank you so much. Bloomberg's finance editor Tom Metcalf joining us this morning. Now, coming up, Prudential reports full-year earnings results as the insurer completes its repositioning to Asia and Africa. The chief executive, Mike Wells, joins us next. This is Bloomberg.
Paesi come l'Italia.
Italy should not worry about Russia's blackmailing on gas. Together with any CEO, Claudio Descalzi, we are building a new energy partnership to avoid further blackmailing from Russia on gas. If a country has the legitimate desire to join an international organization, another country won't stop the ambition just because it has more tanks. But if in Putin's mind reaching a peace agreement means that Ukraine accepts all of his demands, we are talking about a surrender. As my colleague Jean-Yves Le Drian said yesterday, surrender is not a solution.
Italy's Foreign Minister Luigi Di Maio speaking to me yesterday on the war in Ukraine and Russian oil. Now let's check in on the markets. And of course, we're seeing a complete reversal. I don't know how long it lasts, and we're seeing quite a lot of volatility. But we're certainly looking at a reversal when you look at some of the U.S. futures. European stocks rising 5%. Now, if you look at the banks, the ones that were slammed yesterday and the day before, gaining 5.7%. Again, there are dip buyers wagered by the global economic impact of escalating sanctions on Russia, which traders say is already reflected in market prices. There is also, I think, a hope out there in the markets that things are de-escalating, certainly in terms of diplomacy, with Mr. Zelensky, the president of Ukraine, saying that they no longer would want a NATO membership. So there's still hope, whether warranted or not, for a diplomatic and more peaceful solution, despite the heavy shelling we're seeing around Kyiv. Now, Prudential shares gaining as much as 8% today after the London-based insurer reported a 17% increase in full-year adjusted operating profit. Now, that's as the company completes its repositioning towards Asia and Africa. The outgoing chief executive, Mike Wells, notes that the conflict in Ukraine could impact market condition, but of course says Prudential's capital position is strong enough to hold up through volatility, also because it's not really focused on this region. Well, Mike Wells joins me here in the studio now. Mike, thank you so much for joining us. When you look at some of the conflict, and I think we need to start there, I know Prudential is very focused on Asia. It's very focused also on Africa as a smaller hub that could become bigger. But I guess the market turmoil, because of the second and third round effects, should not be underestimated in the market.
No, I mean, the events are obviously horrific, and I think they're, as your opening comments, they're starting on creating volatility and political tensions globally. To your earlier point, we don't have exposure to, Europe, let alone Russia and Ukraine. That's not where we do business. We do business now exclusively in Asia and Africa. So the secondary effects you see there are market volatility, potential, further acceleration of inflation, those sorts of dynamics. But we're on the other side of the world of that current crisis.
Yeah, is there anything that you worry about in terms of the markets freezing up? I mean, you lived through the 08 crisis.
Yeah, I did.
And so could we see anything similar there?
No,
actually, there's a big hedge fund position.
A lot better coordination with global, the equivalent of central bankers. There's, excellent dollar liquidity, for example. If you look at the Bank of England, U.S. relationship, those are strong and historic. More cooperation with Asian key central bank figures, Hong Kong MAS and things. I think that model is much more sophisticated than it was in 08. 08, it was relationship-based. I think this has now got good relationships, but also much more technical structure. So that doesn't mean you won't get volatility. Right. And I think it changes what people want to invest in, and it's a risk-off. As you see, we've been a liquid. We're seeing that sometimes as a European stock, and we get hit by volatility noise. But in spite of growing sales 8%, new business profits 13%, and as you said, operating income plus 16%, and it's the risk-off piece, I think, is where you'll see the market go now, because that's the consumer sentiment, not just the trader sentiment.
And Mike, Prudential is now really an Asian-focused business, and actually it's really important for investors and people, that watch us to realize that. What role will Africa play in this? At the moment, it's quite small. How much can it grow?
It is. So Africa is our future, right? So the key when you're a CEO of a 170-plus-year-old institution, there's a bit of a stakeholder mindset to it. Can you make it better than you found it? And there's a responsibility to position things for future leadership. So, I was when I joined Prudential. This is showing my age. Our Asia business was less than £3 million of earnings contribution, and it was categorized as other geographically. Yeah. And now you see the sort of numbers that it's producing. It's one of the largest businesses in the region, and it's grown very dramatically. Africa has got the same potential, but over a longer time frame. And the teams on there.
15 years?
I don't think it's that long. I think it'll go faster. Everything about our industry is accelerating faster. Consumer preference, regulatory, capital models. Technology has made learning faster. If you're a regulator, a consumer, a competitor, so I think that it's about the political development there, but it's a young continent, and it's got tremendous upside and tremendous need for there aren't governments that have retirement savings or health protection schemes at scale, and so that's what we do.
Mike, it's very clear that when you look at what's happening with Russia and Ukraine, so of course it's always the loss of life that we think about,
Absolutely.
But there's also now become an economic war between the US, the UK, certain parts of Europe, and Russia. Do you worry that we're going to see some kind of geopolitical, concerns being transferred with China? And how do you prevent something happening if geopolitically China becomes more aggressive?
Yeah, I think the lens always with China that's important is what's in their long-term best interest. They're not a short, they don't tend to react short-term if you look at their history, and certainly the history of the current leadership. So their moves, I think personally, not less than the corporate view, are always towards what's the greater benefit of China. The key for China now, you've seen they've produced lower GDP growth rate forecast, which is still in excess of 5%. And growth is going to be hard to find globally. Again, I think we're positioned in the markets that'll have it. But 5% is an excellent number for the size of the economy, but it's critical to the success of the economy. So I think that's first and foremost the lens for their government now. So, they're seeing what's happening to an isolationist, Russia now. And I don't think that's, if you're a smart political leadership and they have, very talented people, they're going to look at that and say, we don't need any of this noise. We don't need any of these challenges. They want to grow the economy. And you do that by being a part of the world economy, not separating yourselves.
Mike, you have a joint venture actually in China with CITIC.
We do.
Does it make sense taking it over completely?
So I've been public. I would have loved to have bought the whole thing. It's up 24% this year. It's grown almost 40% a year in both earnings and in its key metrics since I've been CEO. It's an incredibly successful business now, so they enjoy it too. It has a footprint across all of Asia. All of China. It has 84 or 85% of China's economy, and it's got and CITIC's been a great partner. So we'd love to have it. It's working very well as it is now, and they're a sophisticated partner in dealing with China, including the political questions you're asking. They're a great partner.
Mike, thank you so much, and I know you're off at the end of the month, so thank you. I know you're coy about what you're doing next, but I'm going to see you back on Bloomberg with the scoop.
Well, we'll see. In the meantime, you'll see me on holiday with my wife, Lindsay. But thank you very much for having me. Appreciate it.
Mike, thank you so much. Mike Wells there, the outgoing chief executive of Prudential. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US is banning imports of all Russian fossil fuels, including oil, in a major escalation of efforts to hobble Russia's economy. Washington's move will be matched in part by the UK, which is banning Russian oil but will continue to allow gas imports. Other European nations that rely more heavily on Russian fuels will not participate. Now, McDonald's is temporarily closing all of its 850 locations in Russia following criticism that it failed to act quickly after the invasion of Ukraine. The fast food chain says it will continue to pay its 62,000 employees. Heineken, Coca-Cola, PayPal and the owner of KFC and Pizza Hut Yum brands are also suspending operations in the country. And OPEC Secretary General says there's no physical shortage of oil at present. Mohammed Barkindo told Bloomberg in an exclusive interview that futures markets are paper barrels, but in physical markets, supplies are indeed guaranteed. This says crude futures have risen more than 30% since Russia's invasion of Ukraine.
I can tell you, as of this morning, there is no physical shortage of oil. But there is a very strong perception in the market because of the volume that is at stake.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. U.S. futures also on the way up. You can see similar gains for the NASDAQ that you're seeing some here in Europe. Now, these are the indices that were slammed the most. If you look at the NASDAQ futures, gaining some 1.9%. Now, oil, though, remaining firm a day after Joe Biden banned fossil fuel imports from Russia. If you look at treasuries, they're sliding, dollar weakening for the first time in 5 days. Haven demand waned. Unclear whether we're going to see a lot more volatility and whether some of these dip buyers now thinking that the sanctions on Russia are already reflected in the market prices, whether that will continue. Coming up, commodities continue their rally. We hear from the LME chief executive next. This is Bloomberg.
As the exchange, our fundamental responsibility is market stability. And had we allowed those trades to stand, had we allowed the price to continue to spike up, as you see on the graph there, it would have been extremely difficult for some of our market participants to continue their activities.
LME Chief Executive Matthew Chamberlain speaking earlier to our Anna Edwards on cancelling nickel trading. Now, joining us to talk about all of this is our Bloomberg Commodities reporter, Jack Farchi, alongside our colleague Javier Blas. Both co-authored a book on paperback out this week, The World for Sale. It's a fantastic book, which also goes through some of the trading, the ones that we never hear about. This nickel story, Jack, is insane. I mean, it's really throwing back the LME's darkest days. And you kind of think, I mean, it was such a huge position for, you know, this billionaire based in the Far East that you wonder whether there are more big trades like that.
I mean, I think what we're seeing here across commodity markets, you take out Russia, this huge exporter of almost every commodity from markets, and you get all kinds of unintended consequences. You know, it's not unusual for big commodity producers to have short positions in futures markets to hedge their production. When prices start to go up like this, they need to pay margin calls. What we saw here is suddenly people needed hundreds of millions, even billions of dollars of margin calls in a very short space of time. They couldn't get the cash in time, and the market goes, as you say, pretty nuts.
Jack, I mean, we're day 12, right, of the invasion. Are we going to see more cases like this that we just don't know? Are hedge funds and or do we know about some of these margin calls, or do we need to wait for banks to go through them?
We have been seeing some of this already. Russia is, you know, it's pretty astonishing. Until 12 days ago, Russia was a very integrated part of international markets, particularly commodity markets. Big Russian commodity producers were big players on, not just as exporters, but also on international exchanges, trading futures, hedging with big positions with Western banks. A lot of that has been closed out in the last few weeks. Some of what we've seen in, for example, gas markets has been to do with Russian positions being closed out.
But, you know, we go back and we think about the embargo of 73, some of the things that happened in 78, but this feels different because it's touching oil, energy, metals. How much worse could it be?
I think it's very scary. I mean, sitting here as a commodity reporter, it's not something I've ever seen in my career, in my lifetime. It feels like we're heading for a crisis very much like the 1970s, but as you said, the 1970s was an oil crisis. Here we have an oil crisis, a gas crisis, a coal crisis, a wheat crisis, a metals crisis. It could be very serious.
Jack, thank you so much for joining us. Jack Farchi there with the very latest on metals. Now, coming up, we'll have plenty more Bloomberg Surveillance early edition. Anna Edwards talks you through everything that's happening with Matt Miller and Kailey Leinz. This is Bloomberg.
Historically, commodities have been very, very volatile.
The situation in Russia-Ukraine invasion is critical for raw materials.
We are not dependent on Russian oil, and we have tremendous opportunity to secure U.S. energy security.
We will not be part of subsidizing Putin's war.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Investors buy the dip in global stocks. The U.S. bans the import of Russian crude. Meanwhile, House Democrats unveil their own proposal to bar oil from Russia. Europe's on a wartime mission to ditch Russian fossil fuels. We'll discuss the impact in an exclusive interview with the Prime Minister of Greece. And more big names put their Russian operations on hold. Starbucks, McDonald's and Coke are among the latest to hit pause. Welcome to Bloomberg Surveillance. This is the early edition. I'm Anna Edwards in London. Matt Miller and Kailey Leinz join me from New York. And Kailey, we see appetite for risk through the European session and looking ahead to the US futures picture as well, as investors seem to be taking this opportunity to ask what is already priced.
Yeah, and is this a dip that people want to buy? At least for the moment, Anna, it seems maybe that is the case today. That was not the case, though, in Asia overnight. It really was a mixed session. You did have the MSCI Asia Pacific Index in positive territory, but not by much. It was up by about 0.3%, and China and Hong Kong underperformed. At one point, benchmarks for both of those regions were down more than 3 percentage points. We recovered a lot of those losses, but still, though, the CSI 300 in China was down the better part of 1%. It's 6 down day in a row. The longest losing streak since March of 2020, now at its lowest since June of that year. Now, there's a couple things going on. On the one hand, you had the Norway Sovereign Wealth Fund excluding Li Ning, which is a Chinese sportswear maker, from its portfolio because of concerns around human rights in Xinjiang, a story that we have, of course, have talked a lot about. That took that stock down 9.4%. It raises concerns more broadly about institutional investors maybe pulling back from some Chinese companies that do business there. But then, of course, when we think about higher commodity prices, higher oil prices, how all of that feeds into inflation, it kind of feeds into this narrative that maybe it's not going to be so easy for policymakers in China to ease. And of course, those inflation fears leading to a global bond sell-off that did continue overnight once again, including in the belly of the curve in Australia. The 5-year yield there up the better part of 9 basis points at 2.03%, which is the highest in about 6 years, Matt.
Yeah, and we see a sell-off in U.S. bonds as well. Futures preparing us for a higher open right now, up 1.6% on S&P futures. The 10-year yield climbing back almost to 190. Right now, 189.75 as investors sell out that debt. So risk on atmosphere is pervasive. Oil coming down a little bit, back down to 120.30, so still a relatively high level. And this is, to me, one of the most exciting assets to be watching today. Tom Keene's BitDog finally gets up over 40 grand. $41,980. Bitcoin up 9% today. And you know, with the lack of volatility that we've seen over the past weeks and months, this actually looks like a big number now. The reason is that Treasury said, congratulations to the Biden administration on an executive order we've all been waiting for to provide some much-needed regulation to the crypto industry. The problem is, I think that was a slip-up by somebody at Treasury. They then deleted that message, and they don't want to be making any comments on it right now because we haven't seen any executive order quite yet. We're waiting for it, but it just hasn't hit the wires, Anna.
Yeah, really interesting. So the prospect of regulation, does that send Bitcoin up or down? Really interesting to watch that one then, Matt. This is what dip buying in the European space looks like right now. It's all green across the screen as investors ask, as we were saying earlier with Kailey, you know, what is priced in? Have we priced in peak sanction perhaps here for the global economy? What do we look for next in terms of that narrative? This is where European equity markets are then now. Just to highlight a couple of them, the French market, the German market, both up by more than 4%, as is the Italian market. So real buying of risk assets today. And it's not just around equities. We see the euro is stronger, the pound is stronger, and we certainly saw the dollar weakness in keeping with that. Which sectors are being bought up? Well, banks are being bought up because they've been really beaten up, as is the case with travel and leisure as well. Just like during the pandemic, we saw that was a really beaten up space, and certainly it has been in the early part of this terrifying war in Europe. And as a result, we're seeing travel and leisure stocks rebound the most in today's session. This is the onshore ruble. The offshore ruble is a little bit weaker than this, of course, but we are seeing that for the first opportunity for investors in Russia on the onshore side to actually get to trade in the ruble this week. And so we're seeing further weakness coming through in the Russian currency as a result of that. Brent crude actually down this morning here in Europe. So that makes a change. 124.92. So still at these historically elevated level, but a little bit of respite when it comes to the commodity space, Kailey. So in terms of Brent crude, Goldman Sachs classifying the disruption we're seeing on the oil markets right now as one of the biggest periods of disruption in history, which is interesting to note. And also thinking about demand destruction, the high price of gas that we've seen recently coming off those highs today, but Citi saying that already that's going to result in a 5%, more than 5% pullback in terms of European demand this year as industries shut down and look for alternatives.
Yeah, it's no longer just a supply side story, Anna, so that's something we will continue to pay attention to. Now, as for what else we will be paying attention to in the day ahead, South Korean voters are going to the polls to elect a new president in a neck-and-neck election. We'll also get, speaking of commodities, the weekly EIA crude oil inventory report at 10:30 a.m. New York time, and we'll be getting CPI data from Russia at 11 a.m. New York time, Matt.
All right, we'll watch out for all of that. But, of course, the war in Ukraine is still front and center. And the U.S. and U.K. have announced a ban on Russian oil imports and a major escalation of Western efforts to hobble the country's economy. In an exclusive interview with Bloomberg's Anne-Marie Hordern, the former CEO of Yukos Oil said Western Europe's reliance on Russian oil and gas has been a huge mistake, and he discussed Putin's power play.
The regime will change, no doubt about it. Before, it might have taken 10 or 20 years from now, but now it may happen much faster.
All right, amazing get there, Khodorkovsky, who, of course, spent time in Siberian gulag for betraying Vladimir Putin. Let's get the latest with our reporters across the globe. From D.C., we are joined by Anne-Marie Hordern herself, our Washington correspondent. From Paris, we're joined by our European correspondent, Maria Tadeo, and we'll get the Polish-Ukrainian border reaction, the latest on the refugee crisis with Bloomberg's Tom McKenzie. And then we're going to get to the markets angle with Bloomberg's Danny Berger from London. Anne-Marie, we'll start with you from D.C. I don't understand why Congress needs to pass a separate measure to ban oil imports when President Biden did it already yesterday.
Well, Matt, it's a good question because we're not even sure if the House does pass this, but they're going to vote on it, and they likely will. What fate does it have in the Senate? Because, as you say, there already is an executive order from the White House banning fossil fuel imports from Russia. There's also some other items in this bill, like barring Russia from the WTO and potentially bolstering the Magnitsky Act. So there are some other items, but already the talk of this legislation that was being drafted pushed the Biden administration's hand to come out and deliver that executive order. So the administration or the Congress still wants to go ahead with it. But again, we don't know the fate of it because it may pass in the House, but there's no telling tale that Senator Schumer is going to take it on the floor because he came out and he applauded what the administration did yesterday, which was banning those fossil fuels. We should also note, Matt, we got text very, very early this morning, the U.S. about to pass $1.5 trillion. They're going to vote on it.
It still is very early this morning.
Yes, it still is, but this was very, very early this morning. After midnight, our reporters were up incredibly late. One thing to note in this $1.5 trillion spending package, it'll keep the government open, but the Biden administration asks for $10 billion, given the invasion of Ukraine, to go to Ukraine in terms of military, economic spending, and the likes. And they're actually getting a little bit more than that. $13.6 billion is where Congress landed on.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Hordern for us in Washington. Let's get the EU response then with our European correspondent, Maria Tadeo, who is today with us from Paris because important meetings are going to be taking place there later today. And Maria, what are we expecting to hear then from European leaders gathering in Versailles, gathering in Paris, as they watch the US move forward with this ban on energy from Russia and the UK on some products? What is the European response going to be? They've got bold ambition, cutting back on gas reliance from Russia, but so far no ban.
Yeah, no ban. And Anna, I was told and reminded by a Brussels official, and we can debate and discuss about this, but what they say is for every dollar the United States loses on the sanctions, the European Union could lose 10. And it's unrealistic to expect countries like Germany to switch from one day to another into a completely different energy system. So yes, energy will be on the conversation. Yes, the optics around Europe not joining in this ban look bad. And of course, the price is going up. So to some extent, you could argue the damage is already being done. The other thing, of course, that will dominate the conversation is the future of Ukraine. Remember, the country had applied for EU membership, and European leaders will debate this. Now, membership to become a member of the EU does not happen overnight, and I should make it very clear, it does not make you a NATO member. The other thing that I would point that's really essentially the big story that's a focus now in Europe today are some lines that are coming out from Russia, in which the Russian spokesperson for the Kremlin says Russia does not intend on toppling the Ukrainian government, and we do not plan occupation. We would prefer to deal with this diplomatically. So again, this is really where the focus is now in Europe. It's perhaps the softening in the language from the Russians in a war that's now extending into day 14th, and it's becoming much longer than Russia expected and de facto more expensive than Russia expected.
Yeah, so an interesting change of tone from Russia as they maybe change their playbook from what they thought that how this was going to go at the beginning. Thank you so much to our European correspondent, Maria Tadeo. And of course, you can read more on what the EU is doing by reading our big take on how Europe's leaders are making the shift away from Russia's fossil fuels. But now we want to get to the latest on the refugee crisis and what is happening on the border with Poland and Ukraine. Bloomberg's Tom McKenzie is there for us. Tom, what is the latest from on the ground?
Kailey, this is where you really see at least a small slice of the human suffering, the human toll of this conflict. I am on the border, one of the border crossings. Hundreds of people continue to cross. We've seen that. And the vast majority are women and children because, of course, the men have to stay back in Ukraine and fight. Very young children. It's freezing temperatures here. So they cross the border after waiting for hours, sometimes days on the other side of the border. They get to Poland, where we are now. Just hundreds of meters away is the Ukrainian border. Then they're put up in tents and processed. There's hot food, there are volunteers, but it's grueling conditions. The United Nations coordinator who was overseeing much of the logistics here says that his real concern, he told me this last night, is what's happening on the Ukrainian side of the border, where many people are having to spend the night. Again, it's -2, it's freezing, it's snowing. I met one mother with a 2-month-old baby. She had to spend the night overnight waiting to cross this border. She had another child with her, her husband staying behind in Ukraine to fight.
Yeah, what kind of welcome are these refugees getting? I mean, are there international aid organizations there? Are the Polish people showing up to help out? What kind of embrace are they receiving?
Yeah, so Matt, we talk a lot about the coordination, cooperation that we see at the national level in Europe, and indeed between the Europeans and the US and their allies. And that's actually reflected on the ground here. I met a group of guys who come over from New Jersey, all the way from the States. There's people from the UK, France, Germany, Belgium, and of course the Poles themselves really stepping up to try and do their bit. There are dozens, if not hundreds of volunteers here on the ground, supplying food, supplying clothing, tenting, and trying to give the Ukrainian refugees a welcome and trying to help with that logistical process of getting them then beyond this border and to their next destination, wherever that is. And on the national level, the Polish government stepping up with additional funding, about $1.7 billion, to ensure that their economy can sustain this influx of refugees. More than 1.2 million refugees from Ukraine into Poland, just into Poland, and that's just in 12 days. That is the largest refugee crisis that we're seeing in Europe since World War II. Total numbers of 2 million. The UN coordinator, by the way, yesterday says he thinks that could get to 4 million just in the next 2 weeks.
Tom, thank you very much. Bloomberg's Tom McKenzie reporting from the Polish-Ukrainian border. Let's get back to the market conversation. Nickel prices shot up as much as 250% in 2 days on the London Metal Exchange at the start of this week, prompting the exchange to suspend nickel trading and cancel some of those earlier trades. Earlier today, the LME CEO, Matthew Chamberlain, told us that was the right decision.
As the exchange, our fundamental responsibility is market stability. And had we allowed those trades to stand, had we allowed the price to continue to spike up, as you see on the graph there, it would have been extremely difficult for some of our market participants to continue their activities.
Let's get more with Bloomberg's Danny Berger. So no trade in nickel to talk about, Danny, but still the aftermath of what we saw in nickel prices runs through a lot of conversations, I imagine, here in London this morning.
It does. Look, there's been a lot of criticism on the LME's decision. They're the exchange of last resort. So what does it mean if they not only suspend trading, but essentially cancel an entire day's worth of trading? Of course, the LME isn't the only place nickel trades. It also trades on the Shanghai exchange as well. And that, too, saw some extreme levels of volatility. For our radio listening audience, I have a chart in front of me that shows both. And you see this huge spike up in LME nickel futures, which doesn't include yesterday's price spike because, again, those trades were canceled. Shanghai is less because, unlike the LME, they have a cap on how high nickel could go. And we got to that level today. So trading stopped after reaching that level. Now, we continue to also hear about the fallout, mostly for Chinese miners of those who had nickel shorts. Just moments ago, Huayu Cobalt announced that they're facing losses. And Bloomberg also learning more details about Shenzhen, the nickel giant in China. Now, according to people familiar, they've secured a loan because they have billions in losses. That loan will help them pay down some of the margin call that they face from the LME. Now, they're also going to be reviewing their hedging strategy because, of course, they had this huge bet on nickel that caused these losses during the short squeeze. The owner there, according to people familiar, saying that they might get rid of that position altogether.
Amazing to be, at the same time as you're the largest producer of nickel in China, you're also shorting 100,000 tons of it on the LME. Let's get to Jeff Gundlach, Danny, because he always makes some big predictions, some big forecasts, and he's looking at inflation that he thinks could top 10%.
Yeah, this was on his annual webcast. 10%, he does say, is where we'll get to the end of the year at the maximum. His prediction was more like 7.25%, but obviously that's still massive. And he did not mince words. On the Fed, he said their job is to fight inflation. They've done a terrible job so far. He said their end goal, 2%, that's laughable. We're going to be way beyond that. So is the Fed going to have to target 1%, even lower, to get us back to an average of 2%? This is the worry, that the Fed is going to have to be so aggressive to fight inflation at a time where there's concerns about growth. Are they going to break something? This is something the 2-10 yield curve has started to show, just a measly 23 basis points between the two. And Gundlach pointed to this as well, saying that it looks like we're heading to inversion, and if we are, it is likely a recession is next to follow, Kailey.
Yeah, not a great signal. Thank you so much to Bloomberg's Danny Berger. So let's now go from the macro picture to some corporate stories, because the list of the U.S. and European companies pulling out of Russia is getting longer. Just minutes ago, Imperial Brands announced that as of today, the tobacco giant has suspended all operations in the country. This after yesterday, Coca-Cola, McDonald's, Starbucks, and PayPal announced they too will be suspending operations in Russia following its invasion of Ukraine. So let's take a look at how those companies are performing in pre-market trading at the moment here in the U.S. All of them are actually moving to the upside after making this announcement. You have Coca-Cola up 1.6%, PayPal is up by 3.5%, Starbucks by 2.4%, McDonald's also moving to the upside by about 1.6%. And of course, we are seeing a broader rebound in the markets. Futures are higher, Anna. So in part, that's probably what has to do with this, but also maybe some relief, because a lot of investors were waiting to see when these companies might be making a move like this.
Yeah, absolutely. Better to know than not know, perhaps, is the market's conclusion. We will talk markets with Sandra Holdsworth, head of rates at Aegon Asset Management. She'll be joining us shortly. Plus, coming up, how the war in Ukraine is disrupting supply chains for the global auto industry. We'll talk to the Continental CEO. Plus, Greece's plan to save Europe's gas market. Don't miss our exclusive interview with Kyriakos Mitsotakis, the Greek Prime Minister. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. The price of oil dipped today, a day after President Biden said the U.S. would ban the import of Russian crude. Still, oil futures in New York have soared about 35% since the invasion of Ukraine almost 2 weeks ago. Banks and traders are predicting that oil prices will go even higher. Europe's on a wartime mission to ditch Russian fossil fuels. The continent's decades-long timelines for overhauling energy supply systems are now being revved up under extraordinary duress. You can read all about it in today's Big Take, and we'll also discuss the impact of that in our exclusive interview with the Prime Minister of Greece. That's coming up shortly. And Heineken and Imperial Brands join a growing list of companies that have quit doing business in Russia. This comes a day after McDonald's, Coca-Cola and Starbucks announced they were temporarily halting operations in the country. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Matt, the list of companies not wanting to do business either because of humanitarian concerns or indeed because it's just getting really difficult to do business in Russia, it gets longer and longer. What are you watching ahead of the US Open?
I'm really watching the moves in markets. And of course, there's been some amazing volatility, but I was so impressed to wake up and see the DAX was up 4%. Of course, yesterday at this time, it was down 4%. Right now, we're looking at S&P futures. They're gaining 1.75%. So a very risk-on mood here this morning. Investors are willing to let go of the perceived safety of treasuries. As a result, they're up 6 basis points to 190.44. And investors are even selling out of New York crude positions, although we're still at 121.37. It's still an eye-poppingly high number, but we're down 2%. Also, speaking of eye-popping, Bitcoin up more than 9%. This is, I think, one of the most interesting stories, or at least, you know, when you wake up and you need to experience a little bit of schadenfreude that someone else besides you made a mistake. Somebody at Treasury leaked a statement congratulating the Biden administration on its executive order in crypto. Of course, we've all been waiting for more cryptocurrency regulation. The industry needs it. Prices will go higher when we get it. But there hasn't been an executive order yet, and Treasury deleted that from their website. They now have declined to comment on it, but we're expecting something, and as a result, Bitcoin is up over $42,000. Kailey, what do you see in the pre-market?
Yeah, Matt, it's almost like ruining someone's surprise birthday party in a sense. So we'll definitely look and see if we actually get firm confirmation of that executive order and then a firm statement out of Treasury on it. But with that move higher we're seeing in Bitcoin as a result of all of that, you're seeing a subsequent move in crypto-related equities in pre-market trading. Coinbase is up the better part of 7%. And as for some other groups of stocks that are moving higher, broadly the financials are catching a bid as we see that move upward in yields helps them out on the net interest income front. JP Morgan is up a little more than 2%. You're also seeing a continued rebound in travel stocks. That includes the airlines and the cruise lines as well. Carnival is up more than 7 percentage points. And then as Anna was saying, we are seeing more and more companies joining the list of those pulling out of Russia. PayPal, one of the companies along with Coca-Cola, Starbucks, McDonald's yesterday announcing the suspension of their operations there. And PayPal moving to the upside on the back of that, up about 3.5% before the bell, Anna.
Yeah, and we heard about Heineken and Imperial Brands just a little bit earlier on in this the European morning, Kailey. So the European angle on all of these stories, yes, we're seeing a risk-on mood here in Europe, that is for sure. We have moves to the upside on the Stoxx 600 of 3.4%. Matt was accusing me earlier in this week of being a little too obsessed with the negatives around the European banking story. Well, just to prove I can obsess around the positives as well, we see a bounce in that sector, up around 5.8% this morning. As Kailey said, travel stocks moving higher in the pre-market in the US, and travel and leisure stocks also moving higher here in the European session as well. We are seeing a little bit of respite on some of the almost what seemed to have been relentless rally in commodities. We seem to talk about it day in, day out in connection with the war, but even before that, of course, Brent crude 126.12, so just as we're seeing in WTI, a little bit of a pullback from recent highs. Are we starting to price in peak sanction? Is that why markets are able to take this view this morning? And natural gas, we haven't seen Europe coming forward in one voice saying it wants to sanction Russian gas at all. They're not sanctioning energy products from Russia, it seems, even though there is this aspiration, Matt, to cut back on consumption. But certainly we're seeing a little bit of room for some of these energy products to move to the downside in today's
session. The concern there being that you're funding, as you purchase those products, Vladimir Putin's invasion of Ukraine. It's something you don't want to be doing at any price. Now, we've been talking a lot about companies that have been pulling out of Russia, a growing number cutting ties after that invasion. Continental said this week it will cease operations at a plant making tires in Russia's Kaluga that employs some 1,300 workers. The CEO of Continental, Nikolai Setzer, joins us now for more on the company's outlook, as well as Russia's war in Ukraine, the risks there. Nikolai, I want to start on that note. Thank you very much for joining us. How important is Russia? How important is Ukraine to the automotive supply chain? And how big are these risks?
I mean, first of all, how big are the risks? We have published our outlook today under the disclaimer that all the consequences of this geopolitical situation are not priced in, so to say, because it's impossible to quantify them. What we see, of course, is that vehicle manufacturers, they source as well out of those regions, specific components such as wire harnesses, it was reported as well, which has an impact on their vehicle production in Europe. That's on the one hand. The other part, obviously, several raw materials, energy is coming out of that region, which affects our customers, but as well as our production.
How about the energy usage? I mean, are you using Russian oil or gas in your production? And if you were, wouldn't you want to stop that as a funding source for this war?
I mean, we immediately have started task force teams which are working exactly on those questions, how to ensure the energy supply of our plants, which alternative products, which we can use alternative sourcings in order to keep that running in case there should be a disruption or reduced supply. This is exactly what we are doing as we are talking, and again, too early to quantify any consequences out of that.
What kind of sources would you be looking at? Good morning to you, Nikolai. What kind of sources would you be looking at to replace any energy supplies that are either disrupted or become politically unpalatable? Can you give us any details of where the alternative sources might be?
I mean, the alternative sources in the energy sector, such as alternative oil, alternative gas, or even coal, which might be procured then. That is the energy part. On the other part, we are talking raw materials. And you know, on the rubber side, we have in particular the petrochemical parts, synthetic rubber, and all those materials which are sourced. They have to be sourced out of different regions and out of different areas. That's where the teams are on, all hands on deck, and they are working on mitigating all impacts.
And Nikolai, sticking with the financials, you clearly have been facing higher input costs even before the war started, and now things become very unpredictable on that front, I'm sure. What kind of pricing power then do you see in your end markets, your ability to offset those higher costs by charging your customers more?
I mean, we saw raw materials costs already raising last year. I mean, not only on the energy part as well, the semiconductor, all input costs are on its way up. For this year, we are guiding for 2.3 billion euro additional costs on automotive and as well on the rubber side. So very obviously, we are working hard in order to reduce that cost pressure on the one hand. On the other hand, we are in partnership discussions with our customers in order to have a fair contribution as well. Product by product, that is very individual if you are talking B2C products as well as B2B or business with the automotive industry. So there is no one-size-fits-all answer to that question.
But how much more room do you think you may have to pass on those costs, to raise prices to the end consumer before it results in demand destruction?
I mean, to the second part, how the demand will continue in this current environment with all those dynamics and changes, nobody is able to predict. What we can see is that the input costs are rising. They are getting into our P&L, and we have to manage it. We have to manage it on the one hand in order to mitigate costs and working on our cost part. However, there's no way that with 2.3 billion additional costs, we are able to carry all those. So we have to go in those discussions and find solutions.
Nikolai, investors, I mean, consumers love your tires, obviously, and investors, I think, look at you as a tire maker, but you have, of course, the high-tech ContiTech business. Are investors valuing that business as well as you think they should, or are you planning to, make any moves that would unlock the valuation there?
I mean, we've worked on our strategy on the automotive side, on the tech side, as you mentioned, as well as on the rubber and the corporate part in the last year very intensively. We have announced in September a new structure for automotive with strong 6 action fields, technology action fields working together and leveraging those organizations on the one hand. On the other hand, we have now a structure of 3 strong sectors, the automotive business, the tire, and the ContiTech, so the technical rubber business. So and those 3 under one roof, we are sure that we create in this combination strong momentum and more momentum, which we would create by having individual units.
Thank you very much, Nikolai. We appreciate it. Continental CEO Nikolai Setzer joining us there to talk about how the business is coping with the uncertainty, the changes to the business that it has made as a result of the war in Ukraine. Coming up on this program, Greece's plan to save Europe's gas market. We will get the views in an exclusive interview with the Prime Minister of Greece, Kyriakos Mitsotakis. He joins us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. We are looking live at the principal room. Coming up later today, Prime Minister of Greece, which is coming up next. This is Bloomberg.
There just isn't enough LNG in the world. Every LNG facility has been running flat out since the fall of 2020 when prices recovered after the pandemic. I would imagine for the short term, and it's not good for our environment, for the short term, I think their only choice is burning coal just to get through next winter.
That was the Freeport LNG CEO Michael Smith speaking to us on the sidelines of the CERAWeek conference in Houston, Texas. Very timely gathering, of course, of oil executives in the United States. Let's get more on the war on Ukraine, the war in Ukraine, and the political response that we're seeing here in Europe. How far should it go? I'm very pleased to bring into the conversation the Prime Minister of Greece, Kyriakos Mitsotakis, who's with us, and our colleague Francine Lacqua will be kicking off this conversation from here in our studio in London.
And it's all about energy prices. And actually, if you're a world leader, if you're the Prime Minister of Greece, of course, you want to try and temper the impact this has on your population, which is why Prime Minister Mitsotakis joining us now put this very clear 6-point plan addressed to the Commission, Prime Minister, where you lay out, first of all, a cap on title transfer facility, a fluctuation on the band so that it doesn't go too up, too down, stress related on how you, for example, fix price. But the main question, Prime Minister, we have those 6 points. They're clear. The main question is who pays for it. So Europe would still have to go on the main market. So in competing, for example, with on the global market. So you're competing with Asia, but also China for LNG. Who will foot that bill?
Well, first of all, Francine, let me quickly run you through the reasoning behind this proposal. I am a center-right politician, a believer in well-functioning free markets. The real question is whether the wholesale gas market currently is properly functioning or whether it no longer reflects the fundamentals of supply and demand. If you just put up the chart regarding the fluctuations in what has happened in the TTF index over the past weeks, I think it is very obvious that this is no longer a properly functioning market. So if that indeed is the case, that begs the question whether we should make a more drastic intervention to essentially reset the market, rebalance it, and make sure that we avoid excessive fluctuations, which essentially have nothing to do with the fundamentals of supply and demand. And this is at the essence of what I'm proposing to the Commission. I understand this is a bold proposal, but at least it places the essence of the dilemma squarely, within the Council that will discuss this issue tomorrow.
Yeah. Prime Minister, should the EU then actually use funds from its emergency fundraising bond program to bridge this gap?
It would have the capacity to do so if it so chooses. Again, we should not forget that when we put together the Recovery and Resilience Fund, the Next Generation EU after the pandemic, there were many European leaders who thought that this was completely inconceivable even a few months before it actually happened. So we are facing a very extreme situation. If you just look at the impact that these price increases have on electricity bills, not just in Greece, but in many European countries, you understand the pressure we are placing on our citizens. And of course, we do subsidize electricity bills. All European countries do so. But I believe that we need a more systematic intervention. I mean, there are other ideas that have been tabled, for example, by Spain, regarding the way the actual electricity market is functioning. So what I am advocating is a European-wide solution to what is essentially a European problem.
Yeah, and again, they're bold proposals. The specific proposals, though, can help at the margin. But again, it could actually hurt liquidity out there because the real problem is that there's just not enough gas. So how does Europe deal with that?
Well, there is, the gas supplies haven't fundamentally changed, which begs the question, why have we seen these very, very dramatic increases in the price of gas if the supply of gas has more or less stayed steady? That is why I'm arguing that here we have a fundamental problem of a market that is not properly functioning. Obviously, in the medium and in the long term, the Commission has put forward a very bold plan regarding Europe moving faster away from natural gas. But this, again, is a process that cannot take place from one day to the next. So what I am advocating is a short-term intervention in the pricing structure of the wholesale gas market. And of course, we will discuss how quickly we can move forward in terms of decarbonization, in terms of renewables, in terms of the Fit for 55 agenda. We have already taken our decisions, but moving away from gas at a very fast pace, of course, requires more time than we currently have at our disposal.
Right. Prime Minister, good morning. It was that I wanted to ask you about. Does Europe have the bandwidth to do this six-point plan, which is about a short-term solution, I suppose, to a much longer-term problem, which is exposure to Russian gas supplies? Does Europe have the bandwidth to do that and at the same time do the important work of trying to diversify energy sources? Could this just be a distraction from the longer-term project?
No, I don't think it is a distraction, because I think we need to do both at the same time. Again, what I'm advocating is a short-term solution to what is a problem that has appeared in a very, very acute manner over the past months, not reflecting the fundamentals of supply and demand. At the same time, it is clear within Europe that we need to move away in terms of our reliance on Russian gas as quickly as possible. Again, this is not going to happen from one day to the next. And we already have, I would argue, a relatively robust plan in terms of our Fit for 55 agenda of how to decrease over time our dependence on fossil fuels. So what I'm arguing is that we need to look at both the medium and the long term, but also the short-term disruption is so massive and is imposing such a big burden on our consumers, but also on our businesses, that it will no longer be manageable at the level of the national budgets.
Are you, clearly there are many views in Europe about whether energy from Russia should be banned at this time, following what has happened in the United States and to some limited degree in the UK as well. Prime Minister, is Greece one of the countries that wants to see a ban on Russian energy imports into Europe, and over what timescale?
I do not think that an immediate ban of Russian imports of natural gas is a realistic proposition at present.
Do you think that Moscow will stop shipments first so that we don't even need to think about banning, Prime Minister, because they will get there first and stop selling to Europe?
Now, I don't know if that were to happen. We, of course, need to be ready for that eventuality. For example, Greece is importing a little bit more than 2 BCMs of Russian gas. We have contingency plans. We have LNG facilities. We're significantly investing in terms of upgrading our FSRU capabilities in order to import more liquefied natural gas over the medium term. So we have contingency plans. This is a worst case scenario, obviously, what you are describing. We need to be ready for every eventuality. But you asked me if I believe that we can unilaterally, as Europe, move away from Russian gas from one moment to the next. And my answer is that this is probably not a realistic proposition.
Prime Minister, thank you very much for your time. We appreciate it. The Greek Prime Minister, Kyriakos Mitsotakis, talking to us here on Bloomberg TV. And just as we were speaking there, the Russian government to draft a list of banned imports and exports today. We will watch with interest to see which sectors are on that. And thank you also, of course, to my colleague Francine Lacqua for bringing us that conversation. Kaylee.
Anna, we also have some breaking news out of South Korea. Exit polls indicating that Yoon Suk-yeol is leading the presidential election with 48.4% of the vote, while the other candidate, Lee, has 47.8%, according to this joint TV exit poll. Yoon, of course, is the candidate from the Conservative People Power Party. He's more hawkish on Ukraine, North Korea, China, favors closer ties with the U.S. So again, Yoon Suk-yeol is leading the South Korea presidential election, according to exit polls. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. And also joining us, Tom Keene, co-anchor of Bloomberg Surveillance. Tom, S&P futures are up, NASDAQ futures up, but you are watching the Dow.
Well, I'm watching the Dow, and this is an S&P chart that goes back to Roger Ibbotson. I thought we'd take a perspective here over the decades, Kailey, with all the news flow and the exhaustion of this war in Ukraine. This is the acclaimed Ibbotson chart, but I framed it against the Dow Jones Industrial Average, which has its own foibles, with a depression in the lower left corner. And then the little red circle is a point of import. It is the Guadalcanal low. We don't have the time here to go into it, but this is really the bottom of World War II, and some would say the beginning of the ascent of modern capitalism. It's amazing to put in perspective the number of good years we've had recently, Kailey, with a little bit of a rollover in this very painful moment we're in.
Yeah, absolutely, really painful. And the painful facts on the ground still really evident, Tom. And it's a bit of a conundrum as to why we seem to be in such a good mood for risk assets in today's session here in Europe. People asking themselves what's already priced, I suppose.
Oh, this is what the markets do, and it's a healthy part. And if you look at any war, you could really go back to Napoleonic War. Think of the Patrick O'Brian novels and all. Life goes on, and corporations adapt and adjust as they do domestically and internationally. And certainly we're going to see that in the coming days. One thing, of course, they're going to adapt to appears to be an embedded inflation.
Tom, thanks so much. Tom Keene, co-anchor of Bloomberg Surveillance, of course, back with the team shortly. More Bloomberg Surveillance is ahead with Tom Keene and the rest of the team. We'll be hearing from PIMCO co-founder Bill Gross and World Bank President David Malpass. Those conversations certainly worth tuning in for. Meanwhile, European equity markets moving to the upside this morning, up by 3.2% on the Stoxx 600. US futures higher. This is Bloomberg.